Let's talk the holidays and consumer spending, because after a huge year for the stock market and really the economy, there are a lot of optimistic thoughts heading into the next year. Will that optimism be met, or are we setting up for disappointment? We're joined by Diane Swonk, DS Economics founder and CEO. Here's the interesting quandary of the market, and I call it the home and car index, Diane, and I have for a few years, because industry contacts and retail say when housing and car sales are good, we struggle because everyone buys the big stuff and they don't go buy jeans. If you want to own a home or buy a car or buy a house, you're not going to go out and buy a bunch of little stuff because you're saving your money. Is it possible that we get a disappointing holiday season, but yet that could still be a positive for the overall economy? Is that possible?
Well, it's always possible. I think we're going to have a very good holiday season, but I think you're right. It is going to lean towards more household furnishings, repairs, some of it related to the hurricane, but also people have decided instead of moving because of the limited inventory in the housing market, they're adding on to their homes and remodeling, and that is one of the major factors that's fueling it as well. Of course, on the vehicle side, we thought those sales would slow down, and of course they've come back because so many had to be replaced. I'd be worried about buying a used car right now because it might have been flooded, but we are seeing that strength in vehicle sales. There is some clothing categories doing okay as well, but the department store is really being left behind. It turns out they can't seem to lure in to the department stores those millennials. So overall spending will do great this holiday season, but will it be enough to sort of stave off some bankruptcies going forward? I don't think so. I think that's one of the big concerns, is that the secular shift we see, the move from bricks to clicks, and the hybrid of the two is going to be a real problem for some of the more traditional department stores at the end of the holiday season.
Yeah, really interesting points. I mean, listen, it's playing out in the Sullivan household. My wife and I were talking about Christmas. We kind of agreed, there's stuff we want to do to the house, so let's not buy each other a bunch of stuff that we really don't need or want anyway. Let's focus our money on fixing up the home. Sounds like anecdotally, that's going to play out all across the country. I mean, which is not a negative for the economy, though, right? I mean, a dollar is a dollar, but it's just not going to maybe the stores that need it.
Exactly, and that's what's really interesting, is the restructuring we're seeing in retail, the different ways we're spending. Not only are we spending on homes again because they're worth something, they're worth investing in again, and people are finally catching up on all that pent-up demand on repairs and remodeling, and they're also saying, listen, why should I move when I can't find a house that I can move into? Contractors are really in short supply. On the flip side of it, we're also spending a lot of money on discretionary spending, so much discretionary spending. Not only are retirees traveling a lot, that we're seeing weekend rates on hotels in really crowded cities where you used to see the weekend rates drop because they didn't have the business travel. Those weekend rates now exceed the weekday rates. We're now seeing that much travel. That's even with Airbnb, the competition from them. So discretionary spending is also picking up. People are spending on experiences, going out to dinner, kicking it up and going out to bars. And they're finding they can fly to and away from loved ones during this holiday season.
Yeah, sometimes in the same couple of days with mixed feelings. Diane, if we see, let's say, in January we start to get the numbers and we see the department stores, the general retailers come in with weaker numbers, should we view that as a sign on the economy? That it doesn't sound like we should. We shouldn't say, oh boy, no, JCPenney or Macy's or whatever missed their numbers. I'm not saying they will, but if they did, we shouldn't say, the consumer's toast, right? Just means the consumer has moved elsewhere.
Exactly.
So how do we know how good the economy then really is? What should we be looking at?
Well, you really want to be looking at spending on services. How crowded is it when you go out to dinner? How hard is it to find a spot, to wait in line? How long do you have to wait? All of those things. I say the best indicator for me of how good the economy is how good a service you get. The worse the service you get, the better the economy is. So just hope for having to wait a really long time.
What? Is that the Swonk indicator? Are we launching something here?
It is, absolutely.
Because there's not enough good help, right, to go around.
Exactly. And you find places they're scarce on help, and believe me, sometimes I remember in 1999, there was a help wanted sign, actually 2000, it was in the beige book, help wanted, pulse required. Now that was a good economy. Wow.
I think I might, maybe we have a little saying here. You go to a restaurant, the service stinks, but I'm buying the stock.
There you go. That's it. If you have to wait, if you got bad service, it's probably a really good economy.
I like that. You're giving us something on Trading Nation here else to pay attention to. Happy Thanksgiving, Diane Swonk. We appreciate it. Thank you. And folks, as always, thank you for tuning into Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.